Hi friends, so let's start today's analysis. I think an extremely disappointing day today, and we discussed yesterday also that the texture of the market is not good, and that's the reason why probably we saw a downfall today also. It was pretty much on the cards, and it was very disappointing. And I'll give you the reasons why I think so. And today also probably the texture is not good at all. The way we have closed today, and the way we are looking at the markets, the way the positioning of FIs are concerned. If you take all those factors of perspective, texture is still bad, and we are expecting a range of 22,300, 22,800, or let's say 22,550. We're not even gone beyond that. So we are expecting that kind of a range. We have support on those ranges, but still the texture is not changing, and it is looking like it doesn't want to change very fast. Now, before we dwell into the Indian markets, we talk about the US markets for a time being, because those are the things which are actually driving all markets now. So US market yesterday for a small amount of time it went into red, and then we had a smart recovery in the Dow Jones, but still we closed in red, about 80 points. This is in spite of the fact when their inflation came low, they were expecting an year-on-year inflation of around 2.9%, which came at 2.8%, and even the core inflation was down from 3.1% to 3% in terms of the core inflation, which is minus the food and the energy basket. So there was a relief in terms of inflation expectations, because one, the inflation was below the expectations, and more importantly, it was giving a sign of slowing down in terms of the inflation, which I think many people are waiting for, because inflation is one thing now people will be tracking for, or people will be widely noticing for. But why didn't the market still fall, or let's say why were the market still nervous? At one point of time when the news came, Dow future suddenly shot up for 50 points. But again, it came down, and ultimately, during this actual session, it settled down around 85 points down. The problem with the US markets now is that people don't want to look at the historical data. This number has come from the February CPI report. People want to see the actual thing, or the actual change in the inflation number, because of the Trump policies. Now, if you remember that the sanctions have only started taking into effect from March onwards, let's say your Chinese sanctions were on from 2nd February onward, but most of the sanctions have started from March onwards. So people or the economists want to actually see the impact of these tariffs, which will start delivering you the results from this month onwards. Although it will not be entirely into this month, it takes some more time, but still at least a small glimpse of the tariff will start happening. It may come with a lag, because as I told, most of the people have imported a lot of things before the tariff itself, and most of the people were having a lot of capacities to at least run their show for 1 month, 2 months, until as they have more clarity, and probably when this thing settle down. So it might happen that even in March numbers we don't see the full conversion. But eventually, from April onwards, May onwards, we will start seeing those kind of conversion into the inflation numbers. But Trump is rigid. He does not worry on the inflation part nowadays. He's not even worrying on the markets, and he's not even worrying on the recession, which now the probability of recession in US is now increasing day by day. So yesterday, JP Morgan, who was still bullish on US until yesterday, have now told that they are now getting worried on the policies of Mr. Trump, and now they are seeing a 40% chance of recession coming. But don't take these words very strongly. If you remember, in August 2024, let's say September 2024, again these kind of things came up in the US markets, and people were expecting around 30-40%. Goldman Sachs, I think, gave a probability of 40% chances of recession. It never came. Even now, the actual numbers are not showing you like that. The consumption is still positive, so there are no actual signs of recession as such in the markets. In the US market, the actual GDP number has been showing around more than 2% growth up till last quarter. Let's see what happened in this quarter, and which is going to come further. But the chances of recession have been increased by many of the brokerages. Now, these kind of mature markets, they know the implication of these changes in the economy, because these are mature markets. They are running for last 100 years, 150 years. So they discount the things very fast. That is why they are discounting that inflation will come into picture, and probably the rates will remain elevated. Fed will not do any rate cuts, and that's the reason why they are discounting that kind of a recession fear. The problem with India in this case would be that if the rates don't come down for US, then we cannot expect the money to come to India inflow as such, because the bond rates will remain high and it will be risk-free rate. So if your risk-free rate is higher than the returns of India, or let's say marginally lower than India because of currency devaluation, etc., to take all those things into picture, then the chances of money coming to India will still remain low. That is probably the important reason why we are not seeing the inflows in India still. And even if the 2nd April things comes up and we'll see some low clarity on tariffs, still there will be a dilemma in minds of people that what can further Trump do? And that is the reason why equity markets probably will remain subdued. The problem with now Trump is that, in the previous term, whenever the stock markets used to come down, he used to act. For example, the markets are falling because of X reason. He will try to give his support to remove that X reason, and the markets used to again rebuild or restructure, or again come back to their levels, or at least stop falling. Now that is not the case. He has went too far in his ego and wants to, punish people, or let's say he wants to make America great again in the long term. We don't know all those things, but he's still rigid on whatever he thinks he's doing. Yesterday, Europe did their retaliatory tariffs. They've imposed 20% tariffs on their steel, aluminum, and agricultural products. Now Trump is saying he will act on those tariffs once again. Although Europe has told that we are ready for negotiation, because most of the tariffs are starting from April onwards. But we don't know. We don't know Trump what he will do, how much negotiations will happen. Those all things will remain to be seen. But the advantage with this kind of action from Trump would be a lot of investment-driven growth now in many of the countries. So Europe is now being forced to do investment. They have decreased their, or so let's say they've increased their current account deficit target by 1%, which means they will be doing much more spending in the years to come. They want to have investments in their economy. They want to do their capacity building. They want to spend more on their defense part, and they want to bring that economic growth back, and a lot of self-reliance in terms of their consumption as well. This will trigger a capacity-based or an investment-based growth, which happened in 2003, 2008, when most of the countries are building their capacities, whether it is India, US, most importantly China. All these countries were actually building their capacities to actually target the growth, the world growth, which was being seen at that point of time. A similar kind of story, or let's say slightly subdued one, can start from here on. India also will probably feel now that we all have to become self-reliant. We cannot depend on exports, or let's say imports too much. There are chances people trying to blackmail us for one or two reasons, and that is the reason why you will see now deglobalization happening in most of the country. It will not happen suddenly, but over the period of time, it's a 3, 4, 5 years down the line, you will see those changes. Which is in a way it is not bad, especially for countries like India, countries like Europe. China anyways is doing it because that will drive growth. So if it's all I'm consuming my things in India, even if it is more expensive, even if it is more expensive, it will give a growth because you'll give a lot of employment. You'll be making a lot of capacities, which means construction, infrastructure development, etc. When things will happen, these are the factors which actually brings a lot of growth, a lot of employment. Your per capita consumption can go up, your money supply can go up, money circulation can go up, and that leads to a sustained uh, growth because it converts into a consumption cycle subsequently. So those advantages will all be there, will all be there. Those advantages will all be there with you once you enter those kind of investment cycles. So, and India will also be seriously thinking on those lines. I know this is probably a long-term goal. It's not something which we are seeing in a pretty near term, but the world is moving towards it. Also, the world is trying to decouple US. See, most of the economists were saying that decoupling from US will happen in second half of this year. It has started in the first half year of the year itself. Now, if you see the US markets are falling more, but the other markets are reacting to it less. The reason is there's a large outflow of money from US, there's a large outflow of dollar, and there's a large outflow from US centric business. People will try to make their own business strong. People will try to find new partners, new trade partners, and things will work out. See, the only disadvantage which most of the countries have is US is a $32 trillion economy. So, and their per capita consumption is very high. So that is one country which can consume your exports, right? Other countries don't have the capacity because all the countries put together will be approximately 1.2 to 1.3 times of GDP of US. All the countries put together will have a GDP of around what 40 to 45 trillion dollars. That's all. So US, that's why you know, uh, you know give advantage out of it. But if these things start decoupling, if people making their own investments, and we again go back to the deglobalization era, then dollar. Why do we require dollar as a reserve currency? Why do we only have to depend on US for the our markets to grow up? Why would Federal Reserve become so important? Nothing will happen of that sort. In fact, those all things will vanish, and people will become self-reliant as they used to be. It is good or bad. There's a lot of debate. We can all discuss, but that is what is happening now. In spite of that report of inflation, bond yields were actually up. It is now trading around 4.32%. And that's because people are not believing that inflation will come down subsequently. The dollar index is also hovering around 103.45. It is consolidating now at those levels. It's not going up in spite of all the tariffs being announced continuously by Mr. Trump. So eventually, I think the shift of trade is happening very fast. Hang Seng is up 18% since the time of election of US. China is up by around 8%. So money has already shifted towards Hang Seng and China, even after the elections, even after the Trump taking into chair, in spite of the fact that people were aware that tariffs will come into effect once Trump takes his chair. So that's on the global front. There are many things more happening, especially you have to really watch the Japanese bond yield, which are approximately 16 years high. This is to some extent again triggering that yen carry trade, which are not coming in, which are knowing, which are not coming to know now, but things are happening at the background. Nasdaq failure or Nasdaq fall is mainly, it can be attributed to yen carry trade as well, because money is shifting back again to Japan because of the higher bond yields. That also you should take care that Nasdaq will always remain weak until Japanese bond yields remain elevated. So that is again a negative point for uh, Nasdaq. Nasdaq anyways had a good rally yesterday. It was up around 1.5%. Tesla also contributed to it. Many of the new Magnificent Four now, if we call, those all stocks had a good rally because they were all very oversold. If we come to the Indian markets, again a very subdued, disappointing session. Why? Because again we had two good news today. We had IIP growth of around 5%, which is up from last month from 3.2%. We also had a good news in terms of inflation, which has come at 7-month low of around 3.61%, which means that we will be expecting one more rate cut in April now, and SBI has given now total for this year 4 rate cuts, which means they are expecting 3 more rate cuts now in this year, and most of the economists are now expecting 2 rate cuts in the second quarter, which means April, May, June combined, we'll have 2 rate cuts. That's again a good news. People by that I mean is economists are also expecting that we will have the stance change now from the it will become accommodative now from so it will become neutral. We already have neutral say will become accommodative, so that stance change can also take place, which means again more liquidity into system and again much more easing policy. So those things can also come in, which is again a good which will again good thing for the Indian markets. Again, markets completely ignored it. There might be a reason because 3 days we have weekend holidays. Trump is giving new statements every day. People don't want to take chance. It will be a new series from Monday onwards. So weekly series I'm talking about, and probably markets are still nervous. So those all can be the reasons out of it. But the problem is that the FIIs have not covered their shorts at all. There is no short covering happening. It is in a very tight range. Any rally which happens, it's again perfectly sold off. That means that we are not going higher. We are not able to even cross 20 to 550 levels on a decisive way, even today, till date. Even till date, Mars series is still negative. We started Mars series at around 22, 550 kind of levels. We are lower than that, which means that 6 series on the trot, we are still negative, which has not happened in many, many years. I think 28 years, but it's happening now. And now, in the way that shorts have been placed, it's looking like for the entire series, they don't want to cover their shorts, which means up to 2nd April, FIIs will remain short. They want to see what is Trump doing, what kind of actions are coming out, and then what they want to change their stance. Until then, I think markets will remain subdued. There are chances that they don't get down. We don't get down, but the problem is we're not going down because a lot of good news is coming again and again. Liquidity push by Reserve Bank of India, the again the OMO purchases which happened 50,000 crores which they announced, inflation numbers, also all the dollar index coming down. So a lot of good news is coming, and that is why markets are not going down. But they are not going up means they still have a chance of going and breaking and touching one time again those 22,000 levels. It's probably on the chart. It's looking like that because they're not covering their shorts. They have to cover their short. They have to take some long positions. Until unless FIs are not taking long positions, they're still long short position. Last 4 months or 5 months, it is hovering around 16 to 18% lowest. Which means they have no intention of taking longs. And now DIAs have no way of countering or let's say having a competition with the FIIs. They don't have the spine, they don't have the muscle part, they don't have the money part, whatever it is. It is not happening. So ultimately, if DIAs are helpless and we're not getting the FIIs money, then how will the market move? Retail is also in panic. We are, we have decreased our SIPs now. That is again a shocker. So when the FIIs are not buying, DIs are not buying, retail is in panic, then how will the markets go up? In spite of all the good news, if we would have been the normal market, the market would have been up by around 2,000 to around 500 points by now. But we are still digesting or still, what you say, still in our own dilemma that whether we should go long or not, whether we should start rallying or not. But one thing I can say now that I was expecting a W-shaped recovery until last month, but now it will not be W-shaped recovery. Now it will be a straight line recovery. It will be a V-shaped recovery now. Because the market has already seen 4 to 5 good news and it is kept below the pillow. It's lying below the pillow. And we all know when the market will start moving, it will all come into effect in a sudden rush. So whenever now we'll have a good news, not a U-shaped recovery or probably a small recovery, it will be a big recovery and we'll see a V-shaped recovery now. I don't think now we'll have a V-shaped recovery until unless Trump keeps things waiting again. So for example, if he comes on 2nd April and says, no, I'll give you one more month to find a solution, and let's say we'll put a tariff now on 20th April or 30th April or 2nd May or whatever it is. If that is the case and dilemma still remains, then of course market will remain subdued, and we'll then probably for the entire year we might have negative returns. There is no doubt on that fact. But if those things continue too hard, we go too strong on the trade wars, and that kind of dilemma persists for a few more months, then this year can be negative. Absolutely negative. This month can be purely negative. It has not happened for I think 9 years continuously. But we all know records are being broken, and this might also be a series breaker because either we would have had our own strength and would have been challenging the shorts of FI. You know what happened from and then the entire year of 2024, at least the first 6 months or 7 months, whenever the FIs were short, market used to give you big returns. So a simple trade was FIs are short, take long positions, and you will be rewarded. Now that is not the case. Now it's happening exactly the opposite. If they are short, markets are short. If they are long, the market will remain long. So markets are not behaving contrary to FIs now because the money flow is not happening. Previously, the money flow was happening, and whatever the hedge funds or short positions, they used to get challenged. Now they don't have the fear. They're sitting like this. They don't have fear at all. So that's the reason why you not see those shorts being covered up until unless the FIs make their move now to bring back some money or at least stop selling. But they increased the selling yesterday again. They had some 2,200 crores again selling. in the cash market. Again, sold the index futures. Although stock futures, there was still some buying, but again, index futures were again sold. So we who want some index futures buying, we at least want 2 3 days continuous cash buying. Leave about 2 3 days now. We're not even seeing single day buying from FIA. So probably that is the reason why the texture remains weak. Nifty IT is not giving you any uh, relief now because Nifty IT, if you see, up till December it was pretty resilient. But January and February crack has been done by Nifty IT. Nifty IT is now down around 20 to 23% from its highs, which means it's already into a bear market. And uh, the way the probabilities of recession is going up in US, IT will face this problem. They anyways have a problem in terms of AI. We don't know how they will solve this problem. Now the deals are getting rematured, they're getting realigned, they're getting negotiated. So those kind of adjustments are happening. If you really see their earnings, the valuations looks very high. Although they're sitting on cash, that is why they have a lot of advantage. So, and if Nifty IT is 20% of an index, so if 20% of the index remains down, then how do you expect the index to also go up? Although, which means that a lot of things are already in the price, and any surprise happens, then probably that this index will also support you going forwards. But again, a dilemma because the problem is you can't predict Trump. Nobody in the world can predict Trump. And that is why it is remaining subdued, and probably Nifty IT will, probably that's the reason why it will remain, we cannot see much buying in Nifty IT. Nifty Bank is looking good because it is still resilient in terms of it is still I think it's around 12% down from its high, so it's not into bear market at all. Rest of the indexes, most of the indexes, if you remove pharma out of it, most of the indexes are trading in red, are trading in bear markets. Nifty, we can say it is still resilient. It's around 15% down from its high, but Nifty and Bank Nifty, because of Bank Nifty, is not going to that territory. If Bank Nifty, we would not have seen so much of good news. Probably today, Nifty would have also entered into a bear market, but Nifty Bank is holding up and it contributes around 31 32% of the index. Also, NBFCs are doing good. So, these two pockets are probably keeping the Nifty high, but otherwise, none of the pockets are giving any strength. So, that remains the problem. Texture remains still weak. Markets don't want to react on any good news. Yes, we are falling less. Yes, the selling is less from FIs. Yes, it is consolidation happening continues for last 1 week or 2 weeks. Those all positives are there, but the negative is coming from US. The problem is that US does not want to give a clear policy in terms of what he wants to do. He's just lingering on the thing which market does not like. There'll always be uncertainty, and uncertainty cannot lead your markets to go up. Money will not come into our markets this way. What is the forthcoming series looking like, or let's say forthcoming week looking like? Very difficult to say because data is still to be seen. Data has not been made for next week, so not easy. But yes, we have seen call writings at 22,800, 23,000, 22,600 also. We have seen some call writings on the higher side for the next week, which might be a relief rally. We might see some shorts getting covered, but that's only a number because just the first day. Probably Monday will give you a clear idea in terms of what the week will look like and how exactly we are getting positioned for the week. But as of now, I don't think, and we have 2 days now to go. Tomorrow our market will remain closed. Today we have the US markets. Tomorrow we have the US markets. And it is moving up, down, up, down. Any rally is getting sold there also. Those markets are also in. You see their VIX. It is continuously above 25. This week the VIX has touched 30. So in a market like US, if the VIX is touching 30, and if the VIX is still trading above 20 24, imagine the kind of volatility is happening in such a big matured market. A market with approximately $60 trillion of market cap, if these kind of fluctuations are happening, and that's not good. Russell 2000, which is the broader index of US, is now into bear territory. It is even much lower than the levels where the Trump came in. This is in spite of when the Trump has already announced that I'll go for a lot of tax rate cuts and I'm giving a lot of advantage if you start manufacturing into our country. So our stock, if you see what happened with Reliance, it went to 1170, 1160 kind of odd and again jumped very fast. 1250. But again now consolidating, it's again now coming down. So you are not seeing a continuous trend in some of the bigger stocks. You want HDFC Bank to cross 1800. You want Reliance to cross 1300. ICICI Bank, you want to cross 1300. Nothing is happening. They all rally for 1 or 2 days again. They said, they again become sideways. So big stocks are not in that range of breakout. And for any index to break out of the bear market, you need a leader. You need one index to actually start leading, to give confidence to everybody. That is not happening. Although it will be the banking index which will lead the markets, it has fallen the least. It has been the most resilient index till now. So there are more than 90% chance that Bank Nifty will lead the index, Bank Nifty will lead the markets. But when? Question is when? That is not happening. That is still not happening. So we want the leader and we want the Nifty to show first sign of strength. The first sign of strength is you start closing above 20-day expansion moving average. You start, even if you're falling, you are taking support at those levels. It is not happening. It is not happening. You start moving ahead of the call writers. You start trading above the call writers. Not happening. So, but this texture, it is very difficult to give you a rally. It will remain sideways. People will buy, people will sell, but nothing to gain. Better, this market will not give you anything. It's a grinding market which will only take your energy, which will only take out your money, especially if you're an option buyer. Even if you are a future buyer, it's not giving you anything because the range is so less that nothing you will gain out of it. The risk reward is just not there. So I think let's wait for the markets to break the range. Let's wait for FIs to pump in money. We want those cash levels buying. We want the shorts to get covered. We want the long short positions to go up. We want activity in the FNO positions aggressively from the FIs. Then only we'll have some kind of confidence that yes, the bottom is done. We are done for the session. We're done for the bear market, and the market will now move up from here. Probably they'll wait for the April earnings to happen. That might also be one reason, but you have to wait and see. So as of now, the commentary is market are subdued, texture is not good. There are no signs of a big movement upwards, neither downwards. So market will remain sideways in a very small range and just consolidate. That's what I can make out from the markets. With this, I'll end my video today. Thank you so much for listening. Thanks so much.